Ladies and gentlemen, good day and welcome to Shree Ganesh Remedies Limited Q2 and H1 FY26 earnings conference call. As a reminder, all participant lines will be in the listen-only mode and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star, then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Abhishek Mehra from Till Advisors. Thank you and over to you, sir.
Thank you, Bhumika. Good evening, ladies and gentlemen, and thank you for joining this Q2 and H1 FY26 earnings conference call of Shree Ganesh Remedies Limited. The results and investor presentation have been uploaded on the stock exchange. To take us through the results of this quarter and answer your questions, we have with us today Mr. Gunjan Kotia, Full-Time Director, and Mr. Parth Kotia, Full-Time Director and Chief Financial Officer. We'll be starting the call with a brief overview of the performance, which will be followed by the Q&A session. I would like to remind you all that everything said in this call that reflects any outlook for the future, which can be construed as a forward-looking statement, must be viewed in conjunction with the risk and uncertainty that the company faces. With that said, I'll now hand over the call to Mr. Parth Kotia for the opening remarks. Over to you, sir.
Good evening, ladies and gentlemen. Thank you for joining us on this earnings call. It is a pleasure to address you as we review our financial and operational performance for the quarter and half-year ended September 2025. As always, your interest and support are greatly appreciated. Let me begin with the headlines financials. This quarter, Shree Ganesh Remedies Limited delivered a revenue of 30.32 crores, a sequential quarter-on-quarter 23% over Q1 FY26, reflecting our characteristically stronger second quarter performance. This uptick was primarily driven by the increased volumes and solid execution across our client projects. However, on an year-on-year basis, revenue declined by 6%, largely due to subdued domestic realization and softer demand in European markets. The EBITDA for Q2 stands at 9.62 crore, up from 32% sequentially, with the margins at 31.7%, showcasing resilience amid contracts repricing and evolving market dynamics. Net profit for the quarter was 4.93 crore, registering a 43% improvement over the previous quarters. Though 23% lower year-on-year, we absorbed the impact of the market softness and stepped up the fixed costs from the recent investments. For the half-year ended September 2025, our revenue totaled 54.98 crore, a modest decline of 4% year-on-year, while EBITDA came in at 16.92 crore, down 13% from half-year FY25. The net profit reached 8.37 crore for H1, reflecting a 24% decrease year-on-year. Our EBITDA margins for the half were 30.8%, maintaining a robust levels despite a phase of consolidation and transition. Performance in specialty chemicals continued to improve, contributing 11.17 crore during the quarter and 22.34 crore for H1, while export stood at 17.30 crores in Q2 and 28.37 crores in H1. Beyond the numbers, our operations have seen significant momentum. The new pilot facility is entering the final stages of commissioning and will be operational in Q4 FY26, keeping us firmly on our stated timeline. Block 8, which was commissioned recently, is now showcasing strong capacity utilization trends, and we expect to reach around 50 to 60% by year-end. Progress on Block 7 remains on track with the commercial production earmarked for the second half of FY27. On the business development front, our commitment to expanding both capabilities and capacity is starting to bear fruit. We have secured client approvals in Europe for an agrochemical project and began engaging with a major European pharmaceutical company. Our specialty chemicals initiative for the Japanese market continues to advance positively, with the final client approval anticipated by mid-2026. We continue to explore further opportunities in both European and Japanese geographies, reinforcing our strategic ambition to create platforms for rapid future scale-up. As a part of our strategic refresh, FY26 is all about consolidation and capability building. we are laying a robust foundation for sustainable and scaled growth in the years ahead. Our capital investments are positioning us well to capture new opportunities in complex, value-added chemistries and differentiated manufacturing solutions. I must emphasize that quarter-on-quarter and even year-on-year results will show inherent lumpiness. This is an intrinsic aspect of our business. Given the long lead times in our sector, coupled with the significant project-based investments and evolving client demands, the growth will not always be linear. We remain convinced, however, that across the medium to long term, our trajectory will be one of the healthy growth and meaningful value creation for our shareholders. I would also like to give a brief disclaimer to all the participants. Please refrain from asking any specific questions on the product names or client names during this call. Our relationships are governed by the strict non-disclosure agreements, and we are unable to share such details at this moment. At the appropriate time and in accordance with the regulatory and contractual guidelines, we will provide updates as and when possible. Thank you, and I look forward to your questions and fruitful discussion ahead.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Ladies and gentlemen, you may press star and 1 to ask a question. Once again, a reminder, ladies and gentlemen, you may press star and 1 to ask a question. Ladies and gentlemen, we are not receiving any questions. Please press star and 1. We have the first question from the line of Nikhil Porwal from Perpetual Capital. Please go ahead.
Yeah, hi. Thank you. I'm slightly new to the company, so just wanted to get an idea on what is the key focus of the company in general. Is it intermediates for generic or innovator-based products, or are you focused on any particular chemistries, etc.?
Gunjan, I can take it.
Yeah. Okay.
So, hi. I'll just give the brief that we are a specialty chemicals manufacturer and a pharmaceutical intermediate manufacturer company. So our product portfolio is 60% pharma, wherein pharma we cater to majority of export market in European region as well as in Asian region, including Japan and some of them in rest of the world, including USA markets. And in specialty chemicals market, we cater to various different sectors, including agrochemicals, polymer industry, electronics industry, semiconductor industry in recent times, and so on. So we are a specialized chemical manufacturing where we take upon a project which is complex on chemistry base as well as process base, where we can do some value addition and we can create some niche in the projects that we take on. So our product portfolio is based on the chemistries that we practice, and the end application then follows in our circle of competence that we do in terms of chemistry. So currently there are two sectors in pharma as well as specialty chemicals.
Got it. And anything on within pharma, which therapy is something that takes up majority of the revenue or so? I'm not asking about molecule level data or plant level.
So historically, our therapeutic categories were antipsychotic, antidepressant, hypertension, which we used to supply to the European markets. Recently, more of the molecules are from anti-diabetic and oncology. So these two categories are more for the recent TPA intermediates.
Okay. And can you talk a bit about what can be the growth drivers in coming time? Where do you see the revenue growth coming from incrementally? I've just broadly went through the presentation where you've just commercialized Block 8 in your Unit 1, and Block 7 is supposed to be commercialized in the next 6 to 9 months. And you're also building a new plant in Dahej for larger opportunities. So in your CDMO pipeline, do you have any projects which are moving from maybe pilot stage or development stage to commercial stage, which is why you're sort of building a plant ahead of time?
So I'll just give, recently we acquired in 2022 or 23, last 3 years back, we acquired a adjoining property to our Unit 1, which was by the name of Jaiswal Pharmachem. So when we acquired that land, we decided to do the further expansion in that adjoining property, and the Dahej expansion was then hence postponed to later year. So that's why the current expansion of Block 8, the recent new commission of R&D, and Block 7, which is ongoing construction, are happening in that newly acquired land. As of for the growth drivers, I would say for the pharma side, we are currently working with some of the innovator companies or the new European-based pharma companies, where we are working on some of the interesting molecules for the pharma side, like advanced intermediates. And for specialty chemicals, we are, as we have already given guidance and mentioned in investor presentation and press releases as well, we are working for the Japanese market in some specialty chemicals for the electronics and semiconductor industry.
Anything on what can be the end application for semiconductor? Is it anything to do with photoresistant chemicals or, intermediates for these processes?
So at this point we can only say that it's the intermediate, because we have also signed the CDA NDA, and customer is also very, I would say, resistant or secretive of their end application, because they had signed an NDA with their customer. So in this industry, it's very new, I would say, at this moment. So currently, we would just know the chemical molecule that we are manufacturing, and the end application is also not known to us.
Got it. Is it possible for you to split this 60% pharma within innovator and generic supplies? Where is the major concentration, and even CDMO for that matter?
So as of now, everything, all the intermediates and the advanced intermediates that we do are with the generic players and generic market. So even if we are supplying to European market, the molecules at the moment is in generic.
Your margins are quite high for generic bits. I'm glad to see that.
Yes.
One last question from me is, what is the capacity utilization at Unit 1 and what to expect from the Dahej whenever you plan to start? And what is the thought process for setting up the Dahej?
So the Dahej is 2 years down the line from this point, and the product selection on the Dahej will be on the much bulkier side, where we would do some specialty commodity or high volumes product, and it will be in collaboration with the end customer of some sort. So at current, Unit 1 is also divided into 8 blocks, and different blocks has different capacity utilization. But I would say apart from the new block 8, all of the existing blocks are at roughly 60 to 70% utilization.
Okay. That is it from my side. Thank you.
Thank you.
Thank you. A reminder to all the participants that you may press star and 1 to ask a question. The next question comes from the line of Keshav from Raksan Investors. Please go ahead.
Hi, sir. These innovator molecules we are talking about, are these commercial drugs or are we talking about the clinical trial value chain? Sorry, can you repeat? Yeah, so sir, we just spoke that we have some innovator molecules in the pipeline, some intermediates. So are these commercialized for the commercial drugs, or are we talking about these still being in the clinical trial phase?
They are for the commercial products.
Okay, so would these be late commercial molecules which might go generic in the medium term, or is the client scaling up and onboarding us? I mean, if any clarity on that front.
So client is scaling up at the moment, and it will go generic within 3 to 4 years down the line. So they are building up the capacity by evaluating new suppliers as their additional sources to cater the requirements that will build up in the future down the line.
Okay, and sir, if on the current scale of business, would you be able to give what split of the business is coming from these innovator molecules?
So as Parth mentioned, at the moment, we are mostly catering to the generic markets. Since last, I would say 3 to 4 years, we have been started focusing on more innovative molecules or working with an innovator on a good scale, because we recently got a GMP plant as well. So that opens up a door with working on a innovator side with the pharma industry. And currently all the molecules are generic, or intermediates are going to generic APIs. But down the line, after 3-4 years, we would have a good amount of portion of revenue that will be coming from the innovator molecules or from the new molecules. It would be very hard to give us a figure at the moment because still things are under discussion. The volumes also lies with the customer. They are also evaluating the market scenario and they are preparing for the future launches and going aggressive. But I would say down the line, after 3-4 years, we would be having a significant portion of our revenue coming from these new generation molecules or innovative API intermediate molecules.
Sure, sir. That's all from my side. Thank you.
Thank you.
Thank you. The next question comes from the line of Anant from AS Capital. Please go ahead.
Good evening. Am I audible?
Yeah, Anant, you're audible. Please.
Okay. My first question is on the agro side. You mentioned it has been approved now. Can you talk about a bit more detail, like what kind of agro product is it, and is it a fungicide, insecticide, which kind of product, and when do we expect peak sales, and when, which year, and what could be the peak sales for us?
So regarding the end molecule, the application is still very confidential because the product is about to be launched in 27 on a big scale. They have done an initial launch. So we are also not aware of the final application. On the process, it was already patented by the company and they have been getting a patent protection for the next 15 years. They still have 15 years down the line. As per the current customer guideline, they will reach the peak volume in 2029 and they will start buying in bulk from small volumes. They will start bulk purchasing from 27, but it will reach peak in 29 or 2030. That is what the projection customer has given us at the moment.
If the product is getting launched in 2027, so what, for the customer, when does the supply for us from us start? Usually they take for 1 year in advance, and usually they take one requirement for 1 year and keep it with them. So when does the sale start for us?
Yes, so we have already supplied small quantities. They have made a product. They are doing a registration process. So they are already approved. They have bought a material. They have made material. They are doing registration and other regulatory work. From 27, they expect to launch it commercially on a global scale.
Okay. On the pharma side, you just mentioned about that new molecule. Can you throw some more light? So it's a bit confusing because you mentioned it is going generic 3-4 years down the line. And when do we start supplying? Once it goes generic, only we will supply to the innovator. Generally in the pharma CRAMS, if it is the innovator, the margin should be much higher, 35% or 30-35%. So what kind of margin in this generic product, and when does the first supply start for us?
So talking about this molecule, it is for the European customer. They are already supplying the final APIs into the market using European intermediate source. Now they are looking for an Indian manufacturer. And so we have been discussing with them as a manufacturer. We have been signing an agreement and just NDA, CDAs, and they are evaluating the samples and the materials. And so far, since last 2-3 years, they have got a good sales from this API. But the customer took a long time to launch their API properly into the market, so they lost much of the patented period, and now they only have 3 or 4 years left with them to protect this molecule. But since they are getting good sales from the market, they are looking to scale up the productions, and they are looking to buy advanced intermediates from their existing suppliers and also from the new manufacturer. So looking at the current discussion that we had, we would be anticipating that in H2 calendar year 27, we would be starting them commercially supplying these intermediates. In the meantime, we would be just supplying them small quantities and doing the approvals.
Okay. So do you mean to say that when it goes generic only, we will start supplying?
I think we would be supplying them while they still have a protection, but soon it will be generic. So I don't think while it will go generic, we will be a little bit earlier than before going to generic.
Okay, thanks a lot for answering my question.
Thank you.
Thank you. The next question comes from the line of Santosh from Fund Veda. Please go ahead.
Hi, thank you for the opportunity, and again, thanks for the honest and transparent insights the management is sharing here every quarter. My question is regarding the competition landscape. How, in terms of competition, are we expecting or do we see any competition from China or any other countries? I'm trying to understand the risk in terms of competition for SGRL.
Thank you for asking this, but for the new generation molecules in this specialty chemicals, we would be facing competition from the China. As far as our knowledge and customers' knowledge is concerned, we don't have forecasted any manufacturer from the India for these molecules, but definitely we would be facing some competition from China in this molecule because the customer would keep one Indian source and one Chinese source, so there will be a competition, but not that of a fierce competition in spec chem molecules. But going forward in generic molecules and API intermediates, as you know, there are many pharma intermediates company in India who are into manufacturing and supplying to all over the world, including China as well. So on the pharma side, we might face a severe competition from a local Indian manufacturers, if not Chinese, because European people tend to buy nowadays from the Indian source. But for the spec chem, we would be facing some competition from China. So it differs based on the end application. We would forecast that we would not face competition aggressively in these new molecules for the time being, but as and when it goes bigger and more generic, we'll start facing competition. So slowly we will get competition from India and China, but not in the beginning phase.
Okay, got it. Thank you.
Thank you.
Thank you. A reminder to all the participants that you may press star and 1 to ask a question. The next question comes from the line of Yash Naik from Kamaya Kya Wealth Management. Please go ahead.
Hello, am I audible?
Yes, you are audible. Please.
So, previously you mentioned that you are facing a slowdown in Europe. So, can you share some update of current scenario in Europe?
I would say Europe is still a slowdown for us at the moment as well. The uptake that had been going well since past years, it has gradually gone down due to two reasons. First, many of the European API suppliers, they do supply an API to USA, so they fear of keeping some stock and they plan it very carefully. So that is one of the reasons for slowdown in buying the raw materials. And second reason is also due to the new upcoming APIs, the old generic APIs market is slowly and gradually decreasing. So these are the two reasons for us that has contributed to the slowdown in the European market. And third reason, which has been ongoing, as everyone know, because of the energy prices and everything that has been related to the wars, many of the European companies are shifting the API production or preferring to buy a more advanced intermediate rather than buying a generic intermediate which we supply. So these three reasons contribute to a slowdown. And for this particular reason, we had a change of a business model since last few years, anticipating this would come. We are now focusing more on catering to spec chem molecules on contract manufacturing for the specialty chemicals segment, using our chemistry expertise and trying to work with innovators on the new molecules wherever possible.
And if you could share the revenue coming from from Europe.
Currently, revenue portion from Europe is around 60%, roughly approximately 60%.
Okay. And the rest is from India or from other end?
So next would be like domestic market, and then in Asian market there's a Japan market, and approximately 5% from US market.
Okay. And previously you mentioned that the margin going ahead would be around 25.
I'm sorry to interrupt you, Mr. Yash, but your voice is not clear. Can you please speak through a handset?
Hello, is it better?
Yes, sir, it's better.
Yeah. So previously you mentioned regarding the margin would be in the range of 25 to 26 going ahead. And you mentioned that in this financial year the margin would be in the range of 30. So am I correct on that?
So for the margins, we anticipate that going forward, our normal or the sustainable margins are in that region. As mentioned, you're right, 26 to 28%. Currently, our product mix is in such a way that we are able to enjoy the higher margins for current quarter as well. But going forward, as and when the quantity increases and the customer, the product matures as well, so we anticipate that in these current molecules that we are supplying right now, it will normalize the margin.
Okay. And regarding the FY27 that you have already mentioned that we are currently in a consolidation phase. So from FY27, how much growth are you expecting?
So FY27, at the moment, it is very difficult to put on a number on that. But going forward, as and when we'll get more clarity from our customer side for the commercial quantities, because at this current stage, all of the pilots are being cleared. We are getting approval on the pilot scale, on the commercial scale. But it's just a matter of the commercial buying. So as and when the customer gets more clarity on the purchase order or some kind of contract, then we'll be able to guide much better.
Okay. Thank you. Thank you so much.
Thank you. Thanks.
Thank you. The next question comes from the line of Nikhil Porwal from Perpetual Capital. Please go ahead.
Yeah, thank you for the opportunity again. So I wanted to know what is your right to win in generics? So you've been doing well at a higher margin. Is that due to some process innovation or maybe your the product that you choose to manufacture? What do you attribute it to?
So whatever margins we are enjoying at the moment, Nikhil, is all high because of our innovation in process and chemistries. So whenever our philosophy has always been that we would try to go as much backward as possible. We try to start manufacturing from the cheapest raw material available and scale all the way up to the finished product. So while we start project with a customer, we try to maybe manufacture one or two steps first. And as and when product matures, we try to innovate and go 3-4 steps backwards. So the reason you are seeing a higher margins is mainly contributed to our expertise in chemistry and innovation in the process.
Got it. Can you, mention a broad range of, up to what level of backward integration are you in your highest molecule, maybe N minus, 5, 10?
So we have been going up to as backward as 6 steps.
Okay.
But it all depends on the molecules, but we always try to, go as much backward as possible. And we try to improve on the chemistries and processes and efficiency. It's a part of a continuous learning curve. But it will depend from molecule to molecule. So it would be quite... not right.
Which is why I asked for a range, because it will be different for each molecule.
So
do you also have
as much backward as 6 steps,
Got it. Do you also have any patent for any of your molecules filed?
Honestly, we don't have any patent at the moment for 2 reasons. First, we think that the patent protection is not very strong in the Indian market and Chinese market. We have some processes that are trade secrets with us, or where we have given this trade secret protection to the customers. But at the moment, we don't have any patent. We foresee that going down the line, we are planning to file a patent in the developing countries like Europe, US, and Japan. But those things are under discussion and pipeline. But at the moment, we just have some trade secret processes and no patents with us.
Any idea on, your contribution of your top 3-4 molecules to the revenue? How much percentage of revenue does the top molecule contribute, and so on and so forth for 2-3 molecules?
I'd say top 5 to top 10. So, FY25 or FY26, we see top 5 is around 60%, and top 10 molecules would contribute to around 70 to 75%.
Okay. One last question from me is, so, for generic intermediates, your inventory days looks quite high at, 200 plus days, FY25 end. Is there a way where this, sort of goes down over a period of time, or how do we look at that?
Sorry, say again. Repeat.
Is there a way, is there a scope of improvement on inventory days?
What we're trying to do right now is, I think the inventory days would be higher because we normally forecast the requirement and we manufacture it and keep it in stock. So there are two reasons. First, we don't want to mix too many product manufacturing at one time. And second is we are slowly building up a room for the new products and trials as well. So for the time being, I don't see this improvement being affected at the moment.
And I think many of the buys are also opportunistic. So sometimes if we are able to procure the raw material at lower prices in bulk and we foresee the order, like our end product, then we tend to procure the materials for 2 campaigns at once.
Okay, just a ballpark number on, is it possible for you to divide the inventory in finished goods and unfinished raw material?
So it's not like fixated. It would change every quarter or sometimes every 2 months. So as of right now, it depends, I would say.
Got it. No problem. Yeah. Thank you so much.
Thank you.
Thank you. A reminder to all the participants that you may press star and 1 to ask a question. The next question comes from the line of Rohit from iThought PMS. Please go ahead.
Yeah, sir, most of the questions were already sort of answered. But just on your, so you've been quite vocal in saying that this year is sort of a consolidation year. So you mentioned to an earlier question that you were still not sure about how FY27 will pan out. Given what you've spoken, is it so far, is it fair to assume that, like, even if the new projects ramp up, they'll be more back-ended in FY27 or calendar, it will be more towards calendar 27? Is that a fair understanding as things stand so far?
Yeah, I can say that it can be safe.
So in terms of, I would say, I'll just mention that, like in terms of approvals, we have seen that sometimes, like the European markets or the Japanese market takes a long time for the approvals. But at the current stage, what we are seeing is that our samples or products are being approved at the customer's facility. So, for example, one of the molecules are from European region or from the Japanese region. It's already been approved in the lab scale as well as in the pilot scale. Sometimes the delay happens because the end product of the customer side, they take some approval time or they take some time from their end to get the registration from the European government or the local authorities. So easily 1 or 2 quarters are stretched. But we anticipate that by Q2 of next year, we should see some initial churning, initial volumes pick up.
Yeah, no, sir. I think that is it from my side. Thank you.
Yes, thank you.
Thank you. The next question comes from the line of Anand Shenoy from AS Capital. Please go ahead.
Hello, thanks for the follow-up. So, any guidance for this year in terms of sales and in margins? You have done close to 30% in first half, and you are guiding for 24 to 26. So, in the second half, like what margins can you see?
So at the current, I think we will still able to maintain that range, not above the 30%, but definitely around 28 to 30 margin. Again, we had anticipated that it would decrease by now, but still by the end, like till end of this year, we see that it will still be in the higher side of more than 26 to 27% margin.
Okay. And on the sales, any guidance for this year?
As we mentioned, this year it is the year of consolidation, so we see that it will be same as last year.
Okay. Okay, thank you.
Thank you.
Thank you. A reminder to all the participants that you may press star and 1 to ask a question. Ladies and gentlemen, as there are no further questions from the participants, I would now like to hand the conference over to Mr. Parth Kotia for closing comments.
Sure. Thank you all for the participation and insightful questions. We appreciate your continued support and interest in Shree Ganesh Remedies Limited. I think we remain focused on executing our strategy, driving innovation and delivering sustainable growth. We look forward to updating you on the progress in upcoming future and quarters. Wishing you all a good day.
Thank you.
On behalf of Shree Ganesh Remedies Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines. Thank you.